Hello, welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, President, and Founder of the Oxen Group. Check us out at www.theoxengroup.com for all of today's investment ideas and financial analysis. In tonight's recap, we're going to be talking about our Monday market wrap-up, as well as positions in Yoku, S&P to 1410, other current positions and exits, as well as update on our extended value portfolio, tomorrow's forecast, and always our disclaimer at the end of the video. The market wrap-up. The market set up for emotional gains this morning with the Osama bin Laden's death, and dropped thereafter. And it was your typical emotional sort of rally. The market took off in the morning a little bit, gapped up on a big emotional news story, kind of like the same way Japan worked, where we gapped down and then started to sort of sell off from that news. Despite that sell-off, we did get good economic numbers from construction spending, and then the ISM index both beat the estimates set forth for them. But we did finish the day down slightly, and it was our first down day in 5 sessions, and I think a lot of us were expecting something like this to happen, and it may continue tomorrow. We'll get to that in a little bit. But it is nice to see that construction spending does continue to increase. You're seeing, this is construction spending for buildings, for industry, for new apartment buildings, not just homes. This number would probably be a lot better if you could see home construction increasing, but construction spending year over year is decreasing at a lesser rate than it was before, which is good to see. And once that can become positive again, that will be very bullish for the market. The market did drop from the open. We got that news on Osama's death, and it gave us a little pop, and then we sort of sold off a little bit and rallied back up. But this is a time when you start to get maybe a little bearish, because you see the market does try and get going here towards the end of the day, and sells off again. And a lot of stocks, stocks are just at pretty significant short-term valuations, and there's not a lot of just deals out there in the market. And that when that time starts to happen, when you don't just start to see those dips filled back up again, that's when a time when you might start to move towards a little bit of a bearish position, at least in the short term. And that's kind of the way we're starting to feel a little bit right now, is that there really isn't a whole lot of great buy pick opportunities out there right now. A lot of companies have reported their earnings, gotten their earnings movement, and now are sort of flat or have moved up. Maybe they're going to give up a little bit. Companies that haven't reported have moved up with other companies, and their earnings report might be a reason actually to sell off a little bit. We just tried to do a position in Yoku today. Did not work out as well as we had hoped. The stock, as you can see, has moved back to its moving average, and it's getting support there. And we thought that support line would draw a little bit of a rally today, but the stock fell from the open or from a big rally it had midday. We just missed that rally, and we kind of bought as the rally was coming back down, thinking maybe we'll get that rally. And it was kind of our last hope at that this market might still have a day left in it to rally. But when we didn't get that rally, that sort of kind of concluded that this is probably going to be a little bit of a bear pullback here, at least in the near term. I'm expecting that, unless we get, and as always, if we get very, very positive economic or earnings news out there tomorrow, or some kind of other news data point that's not expected, that can rally us. Now, we've been talking about here on our nightlies and throughout our site about, we think the S&P is pretty much set up right now to go to 1400. Whether that's going to be right now, or whether that's going to be end of June. My guess is that what will end up happening is we're going to see a little bit of a pullback here, maybe retouch that 13,500 level. I would say we'll probably move a little bit above that. We'll probably give up maybe 10 or 15 points on the S&P over the next couple of days here. And then that will allow us to get a couple, some deals out there. Some stocks will be a little bit more undervalued. People want to reinvest there, and we'll leg us higher, closer to maybe 1380. And then have it happen again, and then finally get to 1400. Some people have 1410, 1420 I've seen as the next target. But as you can see, we did break through that very large technical stop there, and it does appear that the direction is for 1400. Our current positions, as we talked about, we also exited Whole Foods this morning for a 2.8% loss. We just got in the position on Friday and took the Jeffries downgrade. It looked like a position that was definitely not not great as far as that this stock is going to be able to rally 5 or 6%. But moving into earnings, they've had a lot of solid earnings in the past, a little bit overvalued, but at the same time. And that's this market that doesn't always mean that much. And it looked pretty safe, from the standpoint of this is a company that continues to outperform, continues to beat expectations. Even during times when they've gotten a little bit of analysts, downgrades or haven't gotten love from the market, they've been able to rally off that. And but today the downgrade did come in, and just the stop was just a hit, and just the loss was too much for us to take on much more. I do still think the position has some potential moving into earnings, but I don't think that you're going to see much more than maybe a 1 to 2% gain. We did take a 3% plus gain off on Jinko Solar today. We held a small portion of that position into earnings, and were able to take away a nice little chunk of change from their very solid earnings report. But again, we are looking for a pullback to really load up. We haven't had a ton of positions lately just because there haven't been a lot of good value plays out there. And we're definitely looking for some more things to happen to load up. In the extended value portfolio, we took a 71% gain on SunPower last week after their merger and acquisition with Total SA. We also took a 20% gain away on Jinko Solar last week before earnings. And both positions worked out very well in the solar sector for us. The portfolio is up 12% thus far this year, and this is a portfolio that we just started at the beginning of the year. It's our first year with it. It's a more extended swing trading kind of portfolio with maybe a 1 to 3 to 4 month sort of swings that we're looking at getting. And we use an equity analytics program that we've designed to price target companies, and then we're able to enter these positions when they look like they're nice points for buying, and then exit them when they hit certain price targets. And it's done very well. The first month or two was a little shaky as we started to figure out how to get this portfolio to function properly. But once we've gotten that sort of all the kinks out in it, it's been a very, very solid portfolio. Our last, I think, 6 exits over the last 2 or 3 weeks have been really solid. A couple, Baidu we took away for a 40% gain. We got a GameStop away for a 30% gain. Jinko Solar was a 20%er. We have Dean Foods is close to another huge gain for them. And so we just got a lot of good positions in there. And it's a value portfolio, so we're looking for value investments, good companies that just have hit very down, and they're not near their price targets where they should be trading at. For tomorrow, we've talked about this a little bit, but the Dow closing down and the sort of inability to get any rallies going or much buying throughout the day really does signal maybe a temporary pullback. We had Chesapeake earnings after hours. I think Archer-Daniels and Midland tomorrow, MasterCard, Pfizer in the morning. None of those companies I think are tremendous in the sense that they can really move a market. We do have factory orders and auto truck sales. Again, 2 economic data points that I don't really think can single-handedly move the market. But overall, I do think if we can get some very positive news from those companies, some very good economic data, there is no reason to pull back. We're on the track for 1400 in my opinion. I do think that we do need a pullback at some point, and I think whenever we do see some weakness in the market, you're going to see a pullback. The way to trade that though is tough, because I think when you are going to see these pullbacks, you will see the market wanting to buy it back up. So I don't think going into a day when you see the futures are down 40 or 50 points, then let's just pick up an inverse ETF and the market it's going to go down 100 points. And I would think more like what you're going to want to do is on those down days, on those temporary pullbacks, start to to enter a couple things. Start to look at some very resilient companies that you think have pretty good valuations at current levels. On a 50-point drop, if something you like moves down significantly, that's a day to pick up a portion of that position. If it moves up, you take those gains away, and it's if it continues to move down, you can add to that position at that point in time. I think that's the way to play this right now. It's a tough market right now, definitely hard to trade. A lot of it's easy to just say, well, you could have just bought something and held on to it, and you'd be up a lot after the last couple of weeks we've had. But it's hard to hold on to things when you've got a 3 or 4 or 5% gain if you're trading. And that's actually why we have really been enjoying what we've been seeing in our extended value portfolio, because those are just holdings that we just keep holding on to. The 2 or the 3 or the 1% swings don't really matter to us, and it's more about the long term or mid-term sort of gains on those. That's going to do it for us today. Visit us at www.theoxengroup.com. Email me and my team at contact@theoxengroup.com. Call us anytime at 1-800-709-1160. Please become a part of our 70% plus accurate